Welcome to another Wall Street Informer production on WSI TV.
Welcome into WSI TV. Thanks for joining me. I'm Sean Bauer, Chief Editor of Wall Street Informer on wallstreetinformer.com. Now today I want to talk about one of the most influential traders for all of us here at Wall Street Informer, and that is Jesse Livermore. Now if you don't know Livermore's name, he earned the nicknames Boy Plunger and the Great Bear of Wall Street. You can take a look at him right here. And he earned those nicknames through his ability to bet against the market and build his fortunes. And I say fortunes plural because he didn't just do it once. Livermore was actually able to build an entire fortune, lose it, and then build another one. And that just goes to show the power of employing the correct techniques and the correct strategies to be able to make literal fortunes in the stock market. Now, one of the things we all love most about Livermore is that he shows us that you don't have to be a genius to make money in the stock market, and you don't need to have 50 years of experience before you start making money in your investments. I think one of the things you'll love about Livermore is the fact that he basically exemplifies his two secrets for making all of his money in two very simple quotes from the book about Livermore, Reminiscence of a Stock Operator. Let's go ahead and take a look. And I'll go ahead and read this quote aloud. Quote, "I did precisely the wrong thing. The cotton showed me a loss and I kept it. The wheat showed me a profit and I sold it out. Of all the speculative blunders, there are few greater than trying to avenge a losing game. Always sell what shows you a loss and keep what shows you a profit." Now what Livermore is talking about here is really going against human nature. As you may have noticed in yourself already, anytime you make a trade, basic human emotion and human nature tells you not to lose. So if you say buy Apple stock at $100 and in 1 week's time it's down to $95, you're sitting on a 5% loss. Well, human nature tells you you can't take that loss. So you're going to hang on to that losing trade in the hopes that it gets back up to $100 so you can break even. Then in the next week, whenever it's now down to $90 per share and you're sitting on a 10% loss, that same emotion just grows and you hang on to it even harder, grip even tighter in hopes that it gets back to break even at $100. Then a month later, you see it down at $80. Well, now you're sitting on a 20% loss on something that can really destroy your trading account. Now, on the flip side, let's say you bought that Apple stock and in a week's time, it's up to $105 per share. Now that 5% gain, that money is sitting right in front of your face. And human emotion, human nature, tells you to go grab it. What Livermore is talking about is avoiding those basic human emotions, letting your winners ride, and cutting your losers. So in that losing scenario, when Apple falls to $95, if you cut it right away, you take a 5% loss in something that's going to do minimal damage to your account. You probably will hardly even realize the losses. Now on the flip side, whenever we see Apple gaining $5, the worst thing you can do is close out that winning trade right now. Because you're going to look back a month later, Apple's going to be at $120 and you're missing out on those 20% profits. Now the beauty about this strategy is that even if you have that winning trade, it goes up to $105 per share and you're sitting on a 5% gain. If it comes back down to $100, you can then close it out and that's break even. So at that point you're playing with the house's money. And that's one of the greatest strategies that Livermore employed to build his fortunes in the stock market. And that brings us to the second Livermore quote. And once again, I'll read this quote aloud. Quote, "I think it was a long step forward in my trading education when I realized at last that when old Mr. Partridge kept on telling other customers, 'Well, you know, this is a bull market,' he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements. That is, not in reading the tape, but in sizing up the entire market and its trends." Now here, when Livermore uses the term reading the tape, what he's talking about is paying too close attention to the day-to-day movements in price on a stock, a sector, even the market in the short term. Now instead of thinking in the short term, where you're talking about 2 weeks, 1 month, even several months at a time. He's talking about taking more stock in the primary movement, and that is 1 year, 2 year, even 5 years of looking back at what direction the stock market's gone. Now, the overall stock market acts as a tugboat for the stocks or regular boats behind it. So whenever it's trending upwards, it's naturally just going to pull those stocks up with it. The same is true for the exact opposite. So if the stock market's been falling and there's a trend of that fall, it's going to act as gravity and pull other stocks down with it. And that's where we can find actually the single most important lesson that we'll ever teach you at Wall Street Informer. And that is the very first thing you ever look at in any trade before you even find the stock that you'd like to trade is to look at the primary or long-term trend of the overall stock market. This can be the S&P 500, the Dow Jones, whichever index you like the most. That's going to serve as your long-term trend. So look at a 3 to 5 year chart of whatever index you choose and start there for any trade you're going to make. Now, if the trend is upwards, you're looking to buy stock. If the trend is downwards, you're looking to short sell stock, which is just betting against that stock. And that's actually where 70% of investment professionals aren't even able to beat the S&P 500's natural movements. They focus far too much on the short-term trends of the market rather than looking at that overriding primary trend that's either going to drag all stocks up or all stocks down. So remember, before you make any trade at all, look at that primary trend and make your trade in the same direction. Now, if you can employ these two lessons that Livermore just taught us, you'll be able to start building a fortune of your own, just like he built his fortunes. Okay, I want to thank you for joining me here for this episode of WSI TV. And if you're not already a member of Wall Street Informer, you can head over to wallstreetinformer.com and become a member for free and start utilizing all of our resources. So thanks again for joining me, and I'll speak to you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.